We're also keeping a close eye on Microsoft this morning here as this is another tech giant that's got shares tumbling in pre-market despite beating on Wall Street expectations for the first quarter here. Slowdowns in the PC market. You got cloud services and a strong dollar all weighing on sales for the quarter here. And particularly you think about some of the cloud systems perhaps there. That came in line with the expectations of about $20.3 billion. And then they talked a lot about Azure on the call. But I think particularly within this as well, the FX, we've heard this cited especially from so many of the tech companies that have that multinational global presence. And FX is going to continue to impact this company. And it was in line with expectations for this most recent quarter, but they mentioned going forward from here, that is still something that's going to have a headwind in these coming quarters as well.
Yeah, I think John DiFucci over at Guggenheim, I think really nailed it in his notes, saying this, quote, "We see this as a generally weak macro environment having material effect on a broad-based, well-run company." So like Google, like Julie mentioned, there was this notion that coming into these quarters, these big, giant tech companies would be able to withstand this economic slowdown, maybe not show growth falling off a cliff here, but this commentary from Microsoft on PC demand, a slowdown in Azure, all major red flags. And I would argue, and the market just didn't anticipate hearing this tone. That's why you're seeing Microsoft shares, the top ticker on the Yahoo Finance platform, and of course, losing a lot of ground here in the pre-market.
Yeah, and to be clear here, I just want to emphasize what you said. Growth is not falling off a cliff. Alphabet sales still accelerating. Microsoft Azure sales up 42% last quarter. If you back out currency, they're growing, according to what the company says, they should rise around 37% in the current quarter. So it's not that as though things are going, quote unquote, badly on an absolute basis. It's on a relative basis to what they've been doing and relative to street expectations. So growth is slowing. It is not stopping. It is not reversing. It is in some categories, as you can see there. But overall, for these large companies, it's not that they're doing badly, so to speak. It's that they're not doing as well as they were.
Right on. And the other problem is you just did not get the visibility, I think, from Google and Microsoft on when that growth rate will stabilize. So right now, the market is reading these quarters as if, a couple more quarters from now, we'll still be dealing with a slowdown in Azure, in Google's ad business. None of these companies gave guidance saying, you know what, by the middle of next year, things should be a little bit stable and we'll be back to re-accelerating growth in the back half of next year.
Right. And so for a business that touches so many different parts of either the consumer experience or the business experience as well, continuing to look across the portfolio of clients that they have. And Microsoft talked a lot about some of the overlaps that they see, even with another major ERP company with SAP on the earnings call. And Satya Nadella really giving a huge nod to how many of the offerings actually are just in synergy with what is already being run by so many of the companies. That actually gives them even more of an install base, as they call it, that they can sell into if you've got so much of, you could say, a competitor in the cloud, or at least in some of the collaboration tools. But if they've got another major player in the ERP landscape that they can sell into because of the ease of overlap or integration with what Microsoft offers on the cloud front as well, I think that's just another point that really speaks to that growth opportunity that's still there for them right now, too.
One more tiny point, last point. We talk a lot about currency. We talk less about energy costs. I don't immediately think of energy costs for big cap tech companies. And yet Microsoft is going to spend $800 million more this year to cover the higher costs of powering data centers, particularly in Europe. So this is something that is biting the large cap tech companies as well.